Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets closely associated. All markets are closely associated with each other, I guess. But Miles, let's jump off with the weekly summary of where prices have gone since last week's recording.
We had a lot of chart activity over the last couple weeks, and I would argue a pretty in-depth look at certainly the gold chart last week. This week it's going to be a little bit different because gold hard stuck in this range, plus or minus around 2,500. I think gold had a total range here of like 20 or 30 bucks. We're up about $20 from our recording last week. So a relatively flat week in gold as it trades between the recent all-time high and that first 382 fib that we looked at last week. So silver, not too different. Still a relatively tight range, although a little bit bigger percentage-wise. Silver actually down since last week, about 50 cents or so, 1.5%. So not significant for silver, but the trading range was actually a little bit bigger with silver, around a 5% total range down on silver at one point with a little bit of a bounce back. So silver a little bit more volatile. Platinum, last week down, this week up about 50 bucks, so around 5% there for platinum. But palladium, anything platinum does, palladium does a little bit better, up around 87, 88 bucks this week, around 9%. So palladium looking a little strong again, back above platinum after this summer, pushing below it. Moving over to the paper markets, the S&P about as even as you can get. It did have a trading range up and down around 1% either direction, but ultimately pretty flat in the stock market. And the dollar, after a little bit of a double bottom here over the last couple weeks, up about 0.25%. So relatively stagnant week, at least within the precious metals and the equity markets in general. I think the bets have been placed already, gentlemen. Maybe there'll be some last-minute gambling before kickoff next week at the FOMC, but I think bets are in on the interest rate change, and now I think we're just sitting tight for the next week.
I want to focus on copper and silver for a moment. I'm looking at the gold-silver ratio, 1 ounce of gold to about 87.7 ounces of silver. I think that ratio is going to widen back to 100 to 1. So if we have anybody holding gold, looking to buy silver, I think their opportunity is coming. I believe that oil is driving the commodities down. If you look at where oil started the year, we're down almost 7%, but from its peak earlier this spring, oil is down 23%. Copper is up 7% for the year. And silver is up over 20% from the year. But from their peaks, copper's down 20% from earlier this spring, and silver's down almost 12%. So I'm looking at oil driving us down. I think we are transitioning for a period from a stagflation to a phase for the next few months of deflation, where the commodities, copper, silver, oil, are all going to soften from here, and that's going to push silver versus gold to 100 ounces of silver equaling an ounce of gold. And maybe we'll get an opportunity in platinum and palladium as well. So that's my 2 cents. I put my nickel on the table. That's my bet. Everybody should be looking for getting back to a ratio of 100 ounces of silver to an ounce of gold, and then we have some things that we want to trade. So call your advisor here at McIlvaney's and get set for this. I could be wrong. I don't think I am.
I just like those outlier events. It's the movement of the ratio to these extremes that offer clients great opportunity. So even if you're wrong and it starts going back the other way, again, as long as it goes to an outlier low, again, great opportunity either direction. And so we like these high ratios. Palladium's pretty fascinating. I mean, it's up $47 today. Miles, you brought up the weekly summary, and that's great price action. And it's got a lot of room to catch up because it's down, well, last week it was down 12% on the year. And so it does have a little bit of room to run. And Rob, it's fascinating to me too that the markets and the analysts and the pundits are just now starting to talk about the possibility of our economy being in stagflation. And we've been saying it for over a year
Right.
that we're in stagflation. And they're just saying
Just
the
now.
Fed has to cut just now. They're saying, oh, the Fed better cut so we don't go into stagflation. And you're saying, hey, they're late. And not only that, but we're looking at a deflationary cycle, and at least in some
Very short term.
Yeah.
I mean, if you
and
look
some
at gold,
markets, not all.
in some
Not
markets, not
commodities.
all. But if you look at gold, we're still above 2,500. Gold is holding steady because it's a monetary metal. It is not commodities like copper or silver or platinum or palladium. So make no mistake about it, the cost of living is still rising, but it's slowing. So you have the increase of inflation beginning to slow as well as the economy softening. This is not good for commodities like oil or copper or silver. So very short term. This is not a change in direction. We're not going to see deflation take hold across the wide swath. Wall Street is in trouble. The Nikkei's back down again today. The yen carry trade is still unwinding. It does make liquidity an issue. There's not the liquidity in the financial markets like there was 6 months ago. So that could affect equities. I don't know that. I'm not an equities expert, but looking from a standpoint of silver as a commodity versus gold, I think we've got an opportunity coming.
Let's not completely leave the industrial metals quite yet, Rob, because I completely agree with you on the stagflation argument there. But let's not gloss over the fact that copper, one of the most common metals on Earth and the most common industrial metal, copper is the mercury in the thermometer. I know mercury is a metal too, but copper really does sort of give you the pulse of what's going on in the industrial
Correct.
consumption world. Copper had a 40% move up this spring. 40. Copper broke into all-time high range this year, just like gold did. U.S. oil got within 12% of the previous all-time highs. Remember back when Don McIlvaney was saying oil at $100 a barrel and everybody thought he was crazy, and then it went to 150? Well, we got within 12% of that number, and copper blew out the previous all-time high by a couple percent, and that only dated back to 2022. So I agree with you that we're seeing a pullback here. Silver, still 35% below the previous highs. Silver needs to go up 50 or 60% to get there. And then gold has just been so consistent. So
Steady
I
Eddie.
think what we're seeing is gold giving us this consistent, like you take a step up and then you just sort of park. I've been saying the word pullback for years and we haven't gotten one. We didn't get a pullback when we were playing sub 2000. We didn't get much of a pullback when gold was bouncing between like 2000 and 2200. We didn't get much of a pullback now that we're up in the 2500 range. Gold is just stair step and pause, stair step and pause.
Well, and you may argue with me here, Miles, but arguably gold has finished higher 7 straight months. And there's a May to June increase of $1. If I look at the NYMEX close, it's 7 straight months of a higher close. That's incredible. With everything that you guys just described in terms of oil and the volatility in copper and the white metals not following suit and the dollar whipsawing back and forth, that's an unbelievable pattern to me of 7 straight months. And again, arguing that May to June, I'm going with 7 straight. Miles, you can show me a chart otherwise.
Well, I'll look it up here. It'll be on the screen by the time we do the edit, so no worries. And you're probably right. I wouldn't disagree with you. But I think this whipsaw and everything else, along with the consistency of gold, I think is making that stagflation argument, because stagflation is a confusing concept because it sounds like two opposing things happening at the same time.
Well, and the inflation rate has dropped lower to 2.5%. You're going to need some sectors to see some deflation in order for it to come down. And Rob, you described that as the ecospasm, where you've got inflation and deflation occurring at the same time.
Occurring simultaneously.
Yeah, so of course we're going to see some sectors, some commodities shrink, but overall, we're still getting more expensive. Life is still more expensive.
Yeah.
We're not talking about those very, very rare events where the inflation rate is actually negative.
Right. We're not in a deflation broad scope, just simply in the white metals. I think the white metals are vulnerable. I think oil is going to pull them down some more. I mean, we still have fundamentally Samsung's new technology for EV batteries coming available. That's going to change the silver demand supply ratio dramatically, but that's still a year out, maybe a year and a half out before that hits the market. I think we do have an opportunity for silver to swoon from here, reposition some of our clients from gold to silver, especially in their IRA accounts, and then transition back to gold as silver anticipates the new batteries coming out from Samsung. So this is a very short-term window.
So with gold trading in this range here that we talked about between the high 24 to low to mid 2500s, it feels like having now retested close to these highs, this 2520, 2530, it seems like some near breakout numbers like 2540 aren't too far away. I mean, with us sitting here still in the low 2500 range after going on a month now, is pretty consistent and healthy sideways movement showing some real strength in gold. And I don't think it's going to take much more international buying or even domestic buying here in the US to continue pushing us forward. So the capitulations in the industrial markets are one thing, but man, gold has just been the steady eddy. So the question is, what are the types of things that could end up pushing that gold price forward?
Well, yeah, I mean, you've got the international buyer, at least in the East. That can certainly do it. To me, a major announcement, Russia's finance ministry just said that they plan on allocating 8.2 billion rubles, that's 92 million US dollars, every day into gold and foreign currency purchases until October 4th. So that's a 7-fold increase. I don't know what they see coming, but what else do you want to own right now? I mean, to me, that makes sense. Why would you not want to strictly be sitting in hard assets instead of paper, instead of cash? So I don't know. I mean, that's it. And then Washington may not be the buyer in a sense. They're the spender. And as far as gold staying strong, nothing's changing in terms of what Washington's doing. We've got another continuing resolution or CR, and all that is an appropriations bill, and because it appropriates money or spending to all of those bureaucratic departments that we fund. It's 12, 13 of them, something of that. And that's the major departments that need the money to keep operating for personnel and everything else. They're going to kick the can down the road and do another one of these CRs, these continuing resolutions, so that they can get down later and do this larger omnibus spending package and go further into debt.
So as we continue to spend money, gold pushes above what is now resistance at around 2540. That further increases the ratio between silver and gold. This just making that argument, we've got some opportunities coming, everybody.
Well, and following on the heels of the major moves up and down in a stagflationary system with some of the industrial metals we just talked about, or even silver, sure, watch oil, watch copper come down, watch silver come down a little bit, maybe go to that 100-to-1 ratio again. But I'm telling you, with those types of inflationary plans ahead, I'd be expecting significantly higher pricing on the industrial metals as well, right in the middle of the inability for the market to swallow up that extra inventory.
It's going to be fun.
There's your stagflation right there.
We're going to have so much fun.
It's going to be an interesting couple of years. I know interesting is a bad word around here, but I don't want to use a different bad word. It's going to be an interesting couple of years. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you joining us each week. If you liked what you heard, hit the subscribe button or ring the bell. You can find more info off our website. We can be found at McIlvaney.com. We're also on Twitter at ICA Gold and Facebook at McIlvaney Financial. And as always, if you'd like to discuss your personal portfolio with one of the advisors here at McIlvaney Precious Metals, give us a call at 800-525-9556. Thanks for listening and have a great week.